If you move to Canada and you don't build your credit score properly, you could get denied for apartments, car loans, or even credit cards. Now, you know the worst part? Most new immigrants damage their credit score even without realizing it. So, in this video, I'm going to be showing you how credit score in Canada works, how to build it properly, what score you need in Canada, the 5 things that affect it, and how to build credit fast as a beginner, and the biggest mistake that actually destroys it. By the end of today's video, you would know exactly what to do when it comes to credit score, using it as your ally for more financial breakthroughs. What is credit score? Credit score simply means trust score. In Canada, the credit score is a number between 300 to 900. So the higher the number, the better. This score, which I love to call your reputation score, it tells the bank what kind of customer or how risky you are to lend money to. You may be asking, what is a good credit score in Canada? Here is how it generally breaks down. I'm going to be looking at my laptop because I actually do not want to forget this. We have the 300 to 559, which is on a poor scale. For 550 to 659, we have the fair scale. For the good credit score, we have 660, 724. From 724 to 759, we have very good credit score. Anything above 760 is a very excellent credit score. For most approvals in Canada, you should have a minimum of 660. Something to reflect on is that if you just came into Canada, even with your PR, it means that you are likely to have absolutely no credit score. So you'll be starting from zero. And that is why we'll move to the next section where we talk about the things that affect your credit score as you're trying to build it, because I understand this is where most people get confused. I was also there. Number one, which is the biggest factor, is your payment history. The fact that you've gotten a credit card, have you been able to use it? And when you use it to purchase, have you been paying it off? That's because late payments can actually hurt your score. The second one is credit utilization. This is the one that surprises most beginners, because when they give you about $2,000 or $1,000, it doesn't mean that it is the time for you to max everything out. The fact that you use exactly everything, it means that you are not trustworthy. So if your credit limit is $1,000, do not use more than $300 in a month. That means do not use more than 30%. High usage signals high risk. What I do, I keep my utilization to 4% or less, because that is even an excellent signal to financial institutions. So one thing I have to say is that I don't use my credit card for grocery, because that's a very variable expense. I use it for a fixed payment, and I cannot use it to pay my rent. So I use it only for my home internet, and my home internet costs $83. That means that every single month I am keeping utilization under 4%, which I am actually going for. Third one is credit history length. The longer you keep your credit card, the better for you. And that is why, even if you're not using a particular credit card, if something happened, you don't like the bank, or you've just decided that you're not a credit person, because when you use it, you max it, and the best thing for you to do is to just keep the credit card, don't use it, because if you close the account, it means that the history that you've already built will be wiped out, and that means that you will have to start building your credit score from the beginning. The other part is the credit mix, where it's a combination of if you have a student loan, if you have the credit card, the student loan, and lines of credit. They say variety actually helps, but this is left to your discretion. What kind of life are you pursuing? Do you need to take a lot of credit just to build your credit score, or are you okay to build it gradually? The fifth factor that affects your credit score is new credit inquiries. If you're opening new accounts, or where financial institutions will have to do hard inquiry on what kind of credit score, it actually brings it low. And I have faced that I opened new account. I was open with the EQ Bank, I was open with Simple Financial, and they needed to know if I'm trustworthy. So opening too many credit cards will actually affect you. It is better for you to keep it simple, Here's the most part that new immigrants don't understand. You can actually build your credit score faster than you think. And that's if you follow a simple strategy. Let's talk about how to build your credit score from zero. The number one is open a beginner or a secured credit card. Many banks offer newcomers packages. What I do is I go for the bank that brings the cash back and there is no annual fee. The step two is to use it for small purchases. For me, I would say use it for a fixed purchase, because when you use it for groceries, utilization could go over limit, especially if you are new. Remember, that's the step three. Do not overspend. Don't use more than 30% of your limit. The fourth step is for you to pay your balance in full before the due date, and that's every single month. This is because consistency builds trust. The biggest mistake to avoid when it comes to credit score is please do not miss any of the payments, and do not use a credit card like a money you own. It is not your money. It is a reputation. It is a trust call, and it is important that you treat it that way. Applying for multiple cards, that will actually hurt your credit score. Now, let's give a real life scenario. You have 1,000 credit limits and you spend $200 per month. You pay it off all in full every single month. After 6 to 12 months, you should be able to move your credit score into a good range. After 1 or 2 years of consistency, you can reach an excellent credit score. You may be asking, okay, what if I don't want to use a credit card? Like, why do we even have to use a credit card? That was actually the same question I had coming into Canada, being that I had lived in Finland, and having a credit card or thinking about credit score wasn't even part of the list. It wasn't important. Now, the reason why credit score is important, especially in Canada, is that financial institutions use that credit score, to make decisions. It affects the renting apartment. It also affects if you want to have a house in the future, if you're going to be approved for mortgage, if you want to have car financing, car loans. It also affects the interest rate you have. So if you have a very low credit score, you're going to be paying higher interest than someone who has a very good credit score. So at the end of the day, you may be paying about 30 or 50% more just because you have a very low credit score. It's a credit dependent system. So what I'm trying to say is that a higher credit score saves you dollars and interest over a long period of time. Now, let that sink in. If you're new in Canada, your credit score is one of the most important financial foundations you will build, and it is important to take action now and not defer it to sometime in the future. Start small, stay consistent, and most importantly, avoid these mistakes I've mentioned. It is your turn. How are you building your credit score? What is one thing I said in the video that is like, oh, an epiphany, oh, I love this and I can relate to it? If you've been living in Canada, please share your tips to help other people, and please tell me what province you're watching for. Now, I'm going to be asking you for a favor. Please click on the like button. Tell others about this channel. This is a channel where we talk about personal finance, building wealth, especially if you live in Canada. Do not forget to subscribe so you'll not miss any of our future uploads. If you enjoyed watching this video, pretty sure you're going to be enjoying this video up here. Thank you so much and see you in the next video. Bye for now.